Jamaica Beach, and we had an electrical storm, a sheet lightning storm, a couple nights ago, and so this is the calm after the storm, right? Everything is clean. The beaches are all washed down. We took a nice slow walk on the beach, picking up seashells. And we had a wonderful morning this morning, spending a little sabbatical time, but also working full-time days. So working remotely, working in Houston, and meeting our friends and investors in Houston for a coffee or for a Perry's Steakhouse meal. But isn't it a beautiful morning here in God's creation? And I just praise God that He gave us nature like this to remind us of just how supreme and sovereign He is, His power and His majesty. We saw that power and majesty in the strength of the storm over the last couple days. And of course, you know, we're on the safe side. We are, we know in our heart of hearts that if a major storm comes up, we have several days notice, because the what folks can see that several days in advance, starting out over the ocean. So we're staying in the safe zone. You know, we commercial real estate investor developers call it risk mitigation. So we're definitely doing that risk mitigation. But it is just amazing to be free. I don't have a boss. Do you have a boss today? Is that one of your goals, is to send a letter of resignation to your boss with mixed emotions, joy and happiness? Yeah, so that's one of the reasons we actually partner together with commercial real estate investors and developers, because it's a team sport, you know, like we talk about. And other people who have a JOB want to get free as well. And I was talking to one of our investor friends who has a Quest Trust account, and she was telling me, we were talking about the fair market value, which we're getting out for our approximate 15 accounts that we work with Quest Trust IRA. In fact, I'm teaching a live lunch and learn at the end of March. Check your newsletter. If you don't have your newsletter, go to invest.theprestige@mayhill.com and opt in if you're an accredited investor. Now, we will be checking. SEC says we have to verify that you are an accredited investor. So back to the story. So I was working with our friend and partner, and she was talking about how her brother has actually invested with us as well, a police officer and a forensic expert, and he has some single family. So you need to set a goal. I never recommend jumping out of a profession. You don't ever want to do that. You've spent decades building that stellar career, and you want to make a goal. Is it double your income in cash flow, or replace your income in cash flow? What is that to you? What is that financial goal? You know, it's always better if we just hit a goal. I've seen a lot of the gurus. Hug. Oh, this is life. Okay, so I've seen a lot of the gurus tell people to leave a good profession, but that's your income stream for right now. And when I started in 2005, I actually started with a 16-plex, that's 16 doors, and forced 80% vacancy, did the rehab. Of course, I was still working as an engineer. You know the story. Working as an engineer, forced 80% vacancy, did a lot of painting like this, with the guys and sweeping and, cleaning and a lot of this, right? So we forced vacancy, we did the rehab, and we retenanted with small working families. We forced all the drugs and prostitutes out of that C minus. There's a lot of C minus properties. There's a lot of violence and uh, lawlessness on those properties. So we forced all that out. We retenanted with small working families. And this was Obama was president. So we saw that tenant mix also uh, even out. Um, so we talk about demographics of your tenants. We had working people. We had 1/3 Mexican, 1/3 Black, and 1/3 white of working families, small working families. So that was the demographic we replaced. And so it just naturally ended up that way. It was cool to see. So we retenanted with small working families. Our rents were always about 25% above market, and we're always full with a wait list. So that first year, when I turned the property, I doubled the value. Just like we did on the Prestige at Mayhill, we doubled the value in the first year. Sorry for the shades, but it is a little bright out here. Um, so that's the work that I did, right? You see some people walking on the beach. It's a beautiful day. It's just gorgeous. So that's how I started. Um, we always recommend that you pick up a 20-plex or more, because that way you have the bandwidth to put a property manager on there and maybe give them half of their rent for free. So it's hard, you know. We're not doing those kind of properties anymore because, right now, especially, the market is such that prices are doubly as expensive as they should be. Prices really need to come down, and some of the gurus are talking about a crash. That's a bunch of hooey. That's a bunch of bunk, because it's just the market, the commercial market, normalizing. So I want you to get used to this kind of a market. This is a normal market where interest rates are a little high. I give you that. Look for the end of Q2 to let the banks starve for a little bit. Owners are holding on to their properties, and um, interest rates, I expect, will come down. So don't write that in sandstone, but that's what I'm looking at. We're holding off on accepting bank loans right now because we're one of the only deals that pencils um, in this kind of a market, because we're so conservatively underwritten. We're one of the only properties that pencils in this kind of a market. So we have lenders, get out of the sun for you guys, but we have lenders, at least 20 lenders who will loan us that construction money because we pencil. We have a 9% yield to cost. That is amazing. That's just amazing. So pretty casual today, guys. I haven't brushed my hair yet, but it looks okay, I guess. So we've got construction banks and lenders, debt lenders, that we're telling no. Other people are having to get a loan at 10, 11, 14%, as if that was normal. But in 20 years of doing commercial real estate and construction, I have never seen construction rates over 9%. We've got a couple good options right now, about 7.7. We've got some other options as well. And a lot of developers have interest in us because we're nearly entitled. We have $8 million of equity in the property, and it's a good deal. So you see if we can get some more of this beach. It's gorgeous because the beaches are clean, and we were able to take a walk and pick up a lot of unbroken shells, which doesn't happen a lot on this beach. There's some trucks, golf carts and stuff that run along the beach, so that was a beautiful opportunity. I just wanted to jump on here for a second and get with you guys and talk to you about your goals and dreams. Is your schedule flexible enough that if you wanted to stay another week here, that you could just renew, pay a little bit of a fee and renew and stay? Do you have that kind of flexibility? If you wanted to stay a month, could you do that? Now that may challenge some people, right? What's your goal? What's your reason why? Is it building generational wealth? Is it diversifying your income? Is it getting your money out of that dang stock market? It breaks my heart, people losing money in that stock market. You know, commercial real estate investing, commercial multifamily, if done right with the right team, we have 400 years of commercial and construction experience. Commercial multifamily is half the risk of the stock market. I recommend you get your money out of that stock market, out from your 201k. It's not a 401k. Come on. Do your due diligence. It's a 201k. We saw this in the 90s. Take that annuity that's not working for you or that IRA and work with us and turn it into a self-directed IRA or a solo 401k. It takes about 2 weeks. You get that distribution coming to you. We're actually giving monthly distributions. And we are blowing our investors' minds. They're so happy. You know, we have a great relationship, transparent. All the due diligence documents are in, but we're also giving collateral on the property. So all of our investors are collateralized. You might want to be one. You might want to be one. Do you? Are you an accredited investor? What's accredited? I don't know. I'm a doctor. I'm a lawyer. What's accredited investor? Well, if you're making $100,000 this year as an individual and have for the past 2 years and think that you're going to do the same next year, you're an accredited investor. If you're making $200,000 a year, oh, I'm sorry, it's $200,000 a year for an investor, individual, 200,000. If you're making 300,000 as a couple for the last 2 years and expect to make that this year, you're an accredited investor. I would encourage you to watch our video on YouTube of how to do your own commercial due diligence. It's very detailed. You can tell I'm an engineer and a landlord developer, but it gives an attorney the ability, or a nurse or a doctor or a salesperson, the ability to know how to do due diligence, proper due diligence on those deals that are coming to your email, because you don't want to get involved with some of these people who have a couple years of experience, 5 years of experience. They got involved in the market that, interest rates were way too low. Now they're in trouble. I mean, this is a bad word. Forgive me for cussing. Capital call. I'm sorry. Forgive me for cussing, but capital call is a dirty word. You hear that in your investment, run. So capital call is when syndicators will call you up and say, "Hey, Joe, I know you put $100,000 in, but we're trying to get this property refied, and this is not us." We don't use that dirty word. In order to not lose your money, you have to bring in more money, or you're going to get diluted. I've heard that a couple times about these mediocre properties, and it just breaks my heart that people are doing that. So we did that video on commercial due diligence, and we've been teaching it in front of 500 investors, 1,000 investors, 50 investors, teaching to big crowds how to do this commercial due diligence. And we want you to be able to have that knowledge in your skill set to do that topical due diligence and know how to dive into the details if you want to. So, what's another accredited investor? I have $1 million worth of assets, land, property, gold, jewelry, etc. outside of my personal residence. You're an accredited investor. There are also some Series 7 and Series 63 and a couple licensed securities designations under the SEC where you would be an accredited investor. So if you are an accredited investor or think you could be, go to invest.theprestige@mayhill.com and just watch that short video. We'll get back with you in 6 or 7 days. We're not going to chase you, so you can take your hand off your wallet. We'll help you do your due diligence. And over the course of a few weeks, we'll decide what your number is. Let us know. Minimum is 100,000. You'll decide what your number is if you're coming in with your IRA that's sitting there losing money, or your 401k, or an annuity that's not keeping up with inflation. And you want to put that to work, or that cash that's sitting in the bank that is over $250,000 insured FDIC limit. You want to put that to work because that's not keeping up with inflation either, guys. If you're an accredited investor, go ahead and opt in. In 6 or 7 days, we'll get back with you. We have a lot of people to work with. We have our current investors that are super happy, so we do give them first right of refusal on all the new deals that we have. What a beautiful morning. Let's look at this beach again. Oh my goodness sakes alive. Ooh, there's that sun. Holy cow. Invest.theprestige@mayhill.com. And today's Saturday, so you have your freedom to build your dream. You want to be that guy in the red shirt? Come on with us and let's work together. Our team has over 400 years of experience in commercial and construction. So, blessings to you. We'll talk to you soon and have a terrific day.